Okay. So now we figured out how to do break-even point. So break-even point, like I kind of said, is just a hurdle. It's a risk. It's a risk analysis, but it really isn't, our goal in business. Instead, most of the time we have the business of making money. Now, obviously, we want to maximize our profits, generally speaking, within reason. But we, can set targets and we can set goals. So how would I figure out, if I wanted to have a certain income or a certain profit of, say $100,000, how would I figure out how many units I need to sell in order to figure that out? Well, we've got our break-even price or break-even point is fixed cost divided by price per unit minus variable cost per unit. But also remember, break-even point can also be said is that it is when fixed cost equals contribution margin. Contribution margin. And the reason for that is because, as we can see back here, my contribution margin is the line above my fixed cost. So when I subtract my fixed cost from my contribution margin, if it equals 0, then that's where my break-even point is. But what happens if I want to make money instead? Well, in that case, rather than break even, I got a target income. And target income, to earn a target income, that'd be fixed cost. That would mean that fixed cost minus my contribution margin. Sorry, contribution margin minus my fixed cost would equal my target income. So another way I could say this is that if what I need this number, sorry, not that number, my contribution number, to be exactly the amount higher of my target income. Whatever my target income is, I need that amount. This 49.5 needs to be higher by exactly that amount. So let's take the old one here. Let's take the old contribution margin income statement. And this is not the target one. This is a break-even point. So this is my. Actually, I'm gonna take this whole thing. So I'm just gonna use most of this. Okay. All right, so this is my break-even point. So now my goal is that now I want this operating income to be higher. In this case, specifically, it says Headverse plans to sell 5,000 bicycle units. Unit variable cost is, okay, but then it says calculate the number of, this is the same problem we worked on before, it says calculate the number of helmets they would need to sell to earn an operating income of 81,900. So basically what I'm looking for is I want this number to equal 81.9, which means the only way that number can equal 81.9, since this number just comes from contribution margin minus fixed cost, is that we need to increase this contribution margin by 81.9. Right? So we need to increase that by 81.9. So effectively what I can do is I can just take this break-even point formula and just add something to it and figure it out. So my target income, find my target income, I'm going to take my fixed cost plus my target income divided by my contribution margin per unit, which also could be just the same as price per unit minus variable cost per unit, to get what my target income is. So all I got to do really is just add my target income to the fixed cost side, because then I have to use a contribution margin, because remember, not every dollar of my sales price, my $75 sales price in this case, goes towards the contribution margin. Only, well, my contribution margin per unit is the price minus the variable cost per unit, so $30. It's only $30 of every sale goes towards it. So that's why I'm using the contribution margin. So in this case, it asks for $81,900 for our operating income. So If I use my formula here, I'm going to say equals fixed cost. I'm put my parentheses, sorry, equals fixed cost plus, I'm going to put target income right here in a second. A, which is 81.9, divided by my contribution margin per unit. And I'm going to put target income is 81,900. So 4,380. So if I take my sales price times my 4380, I also need to take my variable cost per unit as my 4380. And find my contribution margin. Whoops. And then find my income. It went up by 81,900. So 4,380 units is what it would take for my target income of 81,900. So for this company, because how I wrote this spreadsheet, I could figure out whatever my target income wants to be. I can make it 100,000, and it's going to show me what my units need to be for my target income. 150,000 units or dollars is my target income. I need to sell 6,650. $50,000 is my target income. I need to sell 3,316, really 3,317. So I wouldn't want to lose money. So that's how target income works. It's just added to the fixed cost in your break-even point formula.